there is a wide range of opportunities today. The fund is especially exposed to different subsectors. One could be old tech, so the non-sexy tech, for example, Oracle, as an example, or Cisco. These are companies that generate a large amount of cash, they have very safe balance sheets, and they are still growing. And as I said, some very attractive opportunities there. The biggest overweight of the fund is in financials. Financials are a sector as a whole, and different subsectors, banks, insurance especially, have performed poorly in the past because very punitive regulation coming from the global financial crisis, but that has set up a scenario where the balance sheets are stronger than ever and valuation is quite low at the point where economy is doing relatively well, and the setup, I think, is fantastically attractive. Then there are pockets of value as well in the disrupted part of the economy. It could be, for example, any distribution system. Because of the dominance of Amazon, some systems which could be supermarkets or drug distributors or industrial distributors have come down valuation-wise under pressure. And if we find the good opportunities, the ones that will survive, we have discovered some very good and attractive opportunities. I could mention maybe MVR. MVR is a house builder that I used to own in the past, and when it re-rated in a couple of years, we sold it. But when interest rates in US began going up, all the house builders came under pressure. MVR is a very special one. They don't take land risk. So basically, they build houses and they get a margin on that. So it's a much safer company than any other. They don't have any debt in the balance sheet. And maybe I tend to be early when I buy stocks, but I'm sure that cross-cycle in the coming years, the company will turn out very profitable to our investors. A second example could be Alexion. Alexion is a specialty pharma company that treats a rare blood disease, and the key of the investment thesis is that they are losing or they are approaching end of some patents, and that's true. What happens is that we are not paying for anything else. So we are paying for a good franchise coming to an end in several years' time. It's not tomorrow, in several years' time. But the company has some options. They have some pipeline, some money that they can use to buy other companies to invent new pharma, and they have a new management team that will work very hard to either improve the company or to find another financial solution to that. So again, that's another typical case of investment. So if nothing good happens, probably we are paying a fair price and we get the option for free. Obsession is a strong word. Let me say first that probably all, definitely most of fund companies are exceptional companies. And it is true that I tend not to own this type of companies. In the past, I owned Google at a much lower valuation than today. But they are fantastic companies. Great growth, great returns, great balance sheet, most of them. So I have nothing against them. Okay? My discrepancy is regarding valuation. I think that in most of the cases, we are discounting in valuation a lot of the future successes. So my risk reward does not tie up for an investment. Okay? We had some exceptional years, like the year 17, and then things normalized a little bit, and then we had a bit of a correction in the last quarter of 18, but nothing too serious. Valuations are still high for very good, some exceptional companies, as I say. What I think is that if these companies keep performing as businesses well, then the stocks will be adequate, maybe not as strong as before, where we just brought to the present most of the future value. And if some of them or one of them mis-execute, the stock will not work as it is normal. So I wouldn't say that there is an obsession, it's more a normalization of expectations and valuations. No. The most important variable in owning stock is the price, okay? I've been buying Berkshire every time valuation came to very low levels. The investment thesis on Berkshire is not that it's extremely attractive on the upside, but that it has a strong downside protection. For those of you who do not know, maybe just a few of you, Berkshire is a very strong cash flow generative insurance operation, and they have what they call a float, which is the premium that you pay to the insurance, and they keep until they have to pay you back in case you have an accident, called a float, and they invest that float in quite an aggressive way, getting, let's say, levered returns. The situation of Berkshire today is that the valuation is not stringent. They have an industrial base which is very strong and a very big amount of cash in the balance sheet, which gives massive resilience to the stock in case an accident in the market or the company would occur. Okay, so that's why it's a strong position today. Very strong downside protection while participating in the upside of the economic cycle and the market cycle. If the valuation of Berkshire, I hope so, really hope so, would go up significantly, it would not be the biggest position in the fund. I think the short answer is yes. The level of exposure depends on each personal situation. Let me explain what I think are key points on the US economy and US market. US is the cradle of innovation in many things of the world. We can think about internet companies, we can think about shale, oil. It's not by chance that it happens in US. And through funds or stocks in US, you have exposure to that. On top of that, if you think on the index composition, which is not necessarily a mirror of the economy, when you buy a US fund, you buy a very global exposure, very heavy in technology, pharma, and a very strong financial system, more than other parts in the world as of today, after the global financial crisis. So, as a UK citizen, you have a diversification that I think definitely helps you with very strong growth drivers that maybe is difficult to find in other areas. Besides, you buy dollars, which again diversifies your exposure. In the last years, it has been a very good thing to have dollars versus pounds. Who knows if it will continue, but definitely it adds to your resilience, to the resilience of your personal portfolio.